Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, July 18th, 2018. In this video, we'll take a look at gold, precious metals, and the US dollar. I think gold could be setting up for at least a tradable bounce here, and possibly more. So let's go ahead and dive into the charts here, and I'll tell you what I see. All right, this is a daily chart of gold. The last update on gold, if I'm correct, I think was back on July 3rd. We were right here. We had just put in this oversold reading, and I mentioned how, all these arrows show how oversold readings, at least since the gold bottom back here in late 2016, all of those oversold readings proved to be buying ops. And I thought that one might be, but I wanted to hold off. Again, gold's been in a powerful downtrend and was at that point and still is at this point in time. It's certainly without a doubt a catch a falling knife trade. So let's just get that out of the way. If you're not comfortable with those type of trades, you may want to hold off for additional evidence. But with that being said, what happened from that point? We did rally off that oversold reading, and I mentioned that would, be my preferred scenario, but there just wasn't enough in the charts to convince me to add this as an official trade yet. I might add it at least for a bounce trade here soon, maybe even GDX instead. And I want to get this video out there first. Now, keep in mind these charts are as of yesterday's close. I'm doing this video before the market opens today, so these are as of Tuesday's close we're looking at here. Um, the In that last update on July 3rd, I also made mention that there's a possibility we could see this oversold reading again, the one that we had right here. At this point in time, we could see that followed by another dip down to or below the 30 level on the RSI, and that's what's happened here, and that gives us positive divergence, and that's what I like about it. Oversold readings, particularly if they're in a bull trend, which, it's still too early to write gold off completely. We're still well off the lows in 2016. There's still a series of higher highs and higher lows. Not the best defined uptrend, but that's the definition of an uptrend. And this is where this one's called into question because we had, this low here. Here's your next low, low, low. And but then again, you had that here as well. You had a higher low, and then this one came in a little lower. So you had a higher low there, and now here we are here. So, again, not is it a perfect uptrend? No, not perfect, but it has the overall makings of an uptrend. Again, a security making a series of lower highs and higher lows, and if you look at the bigger picture, that's what it looks like. There's your uptrend, if you will. So and now where I was going with that, a minute ago with these oversold readings, you usually get either what I call one and dones, where you tag that 30 level on the RSI. This was an almost 30 hit. These were hits the 30 level. And as you can see above, they proved to be great buying opportunities for a swing trader. Multi-month rallies there, and that's what happened here. We had the first hit, but this wasn't a one and done. This is you get a second consecutive, and almost always it's a lower um, reading in the RSI. I'm sorry, a higher low, and that's what gives us positive divergence. So this divergence is not yet confirmed, but if we zoom in there, you can see the PPO is also making at this point at least a higher low. Uh, Again, gold is in free fall. There's certainly the potential that this divergence gets taken out. By taken out, I mean we go down below the previous lows. But right now, I think the odds are pretty good. And again, gold, it seems like we're at that point where those diehard gold bugs are starting to give up on gold and write it off, and you're seeing some breakdowns on the weekly chart. And if there's one thing this market has taught us in recent years, it loves fakery and trickery, meaning false breakouts, false breakdowns. So here's that big weekly. I just jumped over to weekly chart. Here's that huge symmetrical triangle pattern. This chart spans a decade here, and so there's the lows back in late 2015. Here's the uptrend line, the lower part of that pattern. Now I have to admit, there's not that many reactions. In my book, it usually takes three clear, distinct reactions to validate a trend line. We didn't have much of a reaction here. We've moved through there, so who knows? Maybe we can play around with this trend line a little bit, meaning move it down at this point, and we could certainly do that. You can see it still tends to capture one, two, now three lows, especially now if we get a reaction here, and that's what I was saying earlier. That I think gold looks good right now for at least a tradable bounce, meaning oversold, extremely oversold. Maybe we'll try. I'll try to give you some targets here in a second, but possibly more. If it reverses off here, that will give us that third reaction. If we have if gold can move well away from this trend line, start to rally from here, and then there gives us the potential to break to the upside. So again, now this is a weekly chart, and you can look at these weekly. I showed you a minute ago the oversold readings on the daily chart. They're even more powerful when you get them on the weekly chart. Last time we were oversold on the weekly time frame was right here. Before that, this was really a divergent low, two oversold readings in close proximity. You can see one, two. This one was higher, and that gave us positive divergence right there. So there was a divergent low, which really marked the end of the last bear market in gold in the beginning of the bull market that either we've had or we're still in at this point in time. So that's it. And as I often say, um, oversold readings in bull markets are usually very fleeting and prove to be good buying opportunities. Usually get, especially here on the weekly chart, one and dones. Whereas overbought during a bull market, you can become persistently overbought, meaning for an extended period of time, or get well above that 70 level on the RSI. So there it is. And here, you can see back here, this is bull market bull market action. See how extended and overbought the RSI came. We didn't even see the 30 level until gold was already in a bear market. That was the first time we became oversold back in the last bear market, and then oversold again. And even during that bear market, by the way, these were, that one was a divergent low. They proved to be buying ops as well. So in a bear market, oversold can be a good buying op, although you can be a little early because it can stay oversold for an extended period of time. But in bull markets, especially on this weekly time frame, you get that 30 level on the RSI, and it's a gift. So depends on how you want to look at it. And the thing about investing is, if you take a position in gold with a stop somewhat below there, manage your stops. Well, if we're wrong and this proves to be, we're in the early stages of a new bear market in gold, well, no big deal because you stop out somewhat below that weekly trend line there. And if you're right, the risk reward ratio, a little bit of loss on the downside to a whole lot more potential on the upside, well worth it. All right, let's look at a couple other charts and we'll wrap this up. So back to this daily chart here. Again, what to look for? Well, you can see this. We had a little area of support right here. This is where gold stopped back on that, late June, early July. Had a little pop, fell back there, danced on that level about 117.40 for a while, and then gave it up. Now it would be very bullish to see number one this candle to be reversed. In other words, especially on a single day, but that doesn't have to happen. Just any move back above this candle, backfill of that gap, and a recovery of the 117.40 level. So if you're waiting for a little more evidence in gold, that will, if that happens soon over the next couple weeks here, that would almost certainly give us confirm this divergence right here, and that would be pretty darn bullish. And that would, I think, take us up to at least that 120-ish level right there. So that would be a minimum target for you, and we'll just start here now. If I add this as an official trade, again, I might use GDX. It's usually my proxy for trading gold. Depends. So we'll try to give you some price targets. And even if I don't add gold as an official trade and I don't list specific targets here, you're a gold member. Just bump me for an update in the trading room, and I'll be glad to do it. Here's gold on a 60-minute time frame. You can see this nice divergent low right here. And what I'm referring to is the positive divergence, the PPO, the RSI. They're making equal or higher lows here, a little bit higher low on both the PPO and the RSI, with gold making lower lows, and that gives us the shape of this bullish falling wedge type pattern. So there's an additional buy signal if you see this trend line get taken out with conviction. I think at minimum we pop up here to that 119.88 level, and quite likely if I make this a bounce trade, probably 120, 192. Set your sell limits a little bit below there, but that's what I'd be targeting as a minimum target on this bounce. Even again, if it's just a bear market rally and oversold bounce, and that's not a bad move in gold. That would be about 5%. And here's silver, one of the other shiny metals, and this falling wedge looks even nicer. So you might get a little more bang for your buck on silver. It's a very steep, pretty well-defined bullish falling wedge. Positive divergences down below. Again, 60-minute chart. This shaded box, that was a trading range. You might have noted that on gold too. I had a similar one where it was a multi-month sideways trading range, which gold and silver fell below. Silver fell below back tested. So that would be an ideal target right there. If this bullish falling wedge breaks out, this is what I'm seeing here in silver, we come up here, and that's about the 1520 level to try to quantify it for you from where we closed yesterday at least. You're talking about a 3.65% pop in silver, but again, that's just an initial near-term target based on the 60-minute chart. We look at a daily chart. This is pretty busy. Let me see if I can give you a clean board. One has some fibs on it. Here we go. All right, so what stands out to me, and this is a 2-year daily chart. Let me just put a line right about here. It's not a hard line in the sand, but there is support there. You can see going back for the last couple of years, this level, and call it around 1470, give or take. There's been a few intraday or daily pierces below, and we shot back above there. But for the most part, you can see that this 1470-ish level, and yes, we cracked it just a hair below, but we're talking a few pennies. And again, we've pierced below it before. That has acted as support for years now. So that's the bigger picture, at least on the daily time frame for silver. And you can see a downtrend line right here, this blue downtrend line as well. So that would be very bullish to take that downtrend line out. And of course, bullish if we can defend this 1470-ish level, ideally on a weekly closing basis. In fact, let's look at a weekly chart. Here it is on silver, that same level. I have it 1473. Let me just knock it down a little. And again, you got to give it a little bit of room. These metals trade and they're a little bit, volatile. So there it is. There's the downtrend line to watch. There's that 1470-ish level. You can see it's acted as support now all the way back to, early 2017, late 2016. And we even have some reactions from above. And then look back here in 2015 as well. This additionally validates that level as a significant level. Look at all the support it acted as here back in late 2014, 2015. Tried to break above it there, failed. Finally got above it, and we rallied. So to me, that's an important level to watch. So there's silver at support on long-term charts. And we'll look at finally platinum PPLT. Um, Platinum had a little funky move down lately. This is a 60-minute chart. Something happened, and I verified it was there too in the futures contracts, but gold and silver didn't have that, so I think that was just a heavy-fingered trade or something there. So if you kind of exclude that brief spike, pop right back up, you have the same similar bullish falling wedge type pattern on the 60-minute chart, and also again. You'd have the divergence if you excluded that spike there. So there's platinum, looks ready to run with gold and silver as well. And this one, fell well below its trading range. You can see on the daily chart, we have a line here. Now this might also be a price target. This level here, is actually a support zone. I'd have to add 2 lines there, capture all these reactions over the last couple of years. We broke down through there. So if we do rally in platinum, I think we kick back to this level, and a little more upside there. That's about 8.5 to maybe almost 10% upside. And if it keeps going from there, then you want to watch this downtrend line. I think that'd be bullish if that gets taken out. So there's a confluence of resistance right there, which could, has a potential again to trigger a longer term buy signal. But 2 ways to look at this. You can look at this as a short term oversold trade on these precious metals, or a longer term investor that's been looking to position. The risk reward isn't bad now. I can't tell you that the probability of this trade playing out is the highest, but I can certainly tell you that the risk reward is extremely attractive if you use some appropriate stops in place, not below. So minimal downside, in other words, compared to your upside potential if the precious metals happen to bottom here. All right, let's wrap this up by looking at the currencies real quick. I like my favorite proxy for trading the dollar is the Euro US dollar pair. This is a daily chart. Bigger picture shows this yellow rising wedge pattern right here. We had a very well-defined uptrend line in the Euro US dollar pair. By the way, this represents, I think it's 60 something percent of the US dollar index is the weighting for the euro. So the Euro US dollar pair pretty much is the dollar in reverse. In other words, when these prices are falling, that means the euro is falling against the dollar is going up, and vice versa. So what do I see here? A very well-defined support level that has capped this recent pullback. It also capped this pullback back here as well. And I'll go to the long-term chart in a second to show you that's even a more significant support level. So a couple things here. Well, number one, that wedge, the pattern here, if you take the widest part of the wedge, well, that's certainly played out. You can see it's this pattern has more than met its measured objective. That does not mean that it can't go lower. It just means that if it was a correction in the euro US dollar pair, which is in a bull market, you can see from all the way back here, quite the run. This could just be a correction, and maybe not one more test of this level. And I'll tell you, I'm almost leaning towards a false breakdown, a little pop below it. Usually when you see support hit so many times, and again, I can make the bullish case longer term. Near term, it's hard to make a strong bullish case because I see this PPO right here. It's now crossed the signal line. That's my trend indicator, one of my favorites. It's crossed down below the zero line, and it's coming up now, and it's back testing it from below right at the zero line. Again, I'm talking about the 9 EMA, the signal line, and it looks like it's poised to roll down. And I think it probably will. So what I think will happen here in the euro US dollar pair, and keep in mind, gold in the US dollar can disconnect their inverse relationship for a little period of time. Sometimes you see that. So here's a scenario that I could see happening, and it's my preferred scenario. A little false breakdown here, breakdown below that support level. Probably be a pretty impulsive stick, at least that one day you'd usher in a lot of short sellers, a lot of euro bears, dollar bulls come in, and then boom, turn around and reverse it, and then take off. And then that top of that range, that would be a significant resistance level. But then we'd see something like this. And what that would do, turn down here, go down a little bit on that PPO, and then curl up at that point. And what did that do? It gave us nice positive divergence. That would set the stage for a lasting rally. And now let's jump over to the weekly chart. This is euro US dollar pair on the weekly time frame. So this is 10-year chart. This was a very powerful divergent low, and you can see its basing pattern. We had a multi-year basing pattern, all of 2015, all of 2016, and about half of 2017, the euro US dollar pair based in here. It's a very powerful basing pattern. We broke out here. We came in and back tested it once, and we're back testing that level again. So you can see there was a divergent high after that initial rally, and it was a strong run. And so this pullback was not, should not have come of any surprise. That divergence was mentioned at the time, as was the bullish divergence down here. So it's a matter of, did this rising wedge, and that's the same rising wedge I believe that I just showed you on the daily, did it play out to its full extent? And it certainly has met the measured target, as I said. And again, we're now also at support. This is key support, back testing the top of this multi-year basing pattern. And so that's why I favor this. And if that happens, that means euro's rising while the dollar's falling. And that is certainly bullish for gold. There's some longer term trend lines as well we can play. So that would be my target there. You can see that long-term trend line I just drew, as well as that horizontal resistance around 127 or so. So that's a longer term outlook. And again, that sets the stage for a longer term rally in gold if those things play out. But it'd really be nice to see gold sort of pound out a bottom here or not too far below current levels. Okay, and finally, the second largest component in the US dollar index is the Japanese yen. So let's just take a quick look at that. This is USD JPY. Now flip it around because USD comes first. That means so when this is going up, the dollar is rising against the yen. What do we have here? Plain and simple and very well defined, a symmetrical triangle pattern. Symmetrical triangle patterns can break in any direction. You need to respect the direction they break. When you get a triangle pattern, the momentum indicators and oscillators are useless because they're just floundering around, compressing around the zero line. That's the nature of this, and this thing can break either way. So if it breaks to the upside and anything other than a false breakout, a little pop and then move back down, that's bullish. Dollar moving up against the yen falling. And, I favor if it plays out, if my scenario on the euro plays out that I mentioned a second ago, as well as the bullish scenario for gold, you'll see US dollar, Japanese yen rejected at or around the top of this triangle pattern, move back down to the bottom and ultimately break down below. That would be longer term bearish for the dollar. Let's look at it on the 60-minute time frame. Here it is. Somebody asked about the the yen yesterday. It's the second largest. There it is, second largest component of the dollar index, 13.6% weighting. This is a major resistance zone. You can see all the reactions back here, reactions going back to 2017, quite a few reactions. So this has stopped every advance for the last few years in the US dollar Japanese yen pair. And right now we have negative divergence. We're pushing the upper limits of that divergence on the PPO. It is still there, but we need to turn down soon. If we turn down soon, especially if we fall shy. It would be ideal to see us fall shy of that resistance zone because, as I just showed you, we're right at the top of that triangle pattern or that downtrend line on the weekly chart. So if we could fail here, I'm sure a lot of eyes are targeting that level. A lot of longs are going to planning to stay long there, take profits when it gets there, and the market doesn't like to reward the masses when everybody's positioned the same way. So it'd be nice to see a reversal here, catch the markets off guard, put in that negative divergence, confirm it there, and also you can see down here these arrows right here, white arrows. What do they show? Just look what happened every single time without fail. Um, we have one of these white arrows. We're overbought. Let's use this arrow tool. Correction, correction, correction. Correction wasn't very big, but these were two. I should have another white arrow right here because there was an overbought reading. This is what I call a cluster when they're in very close proximity like this, and you get that divergence. So the first one, you got a little correction, but then you pushed up, you became overbought again, put in a divergent high, and that wasn't the extent of it. This was the extent of that correction there. So now we have, what do we have? We had a divergent low right here. You can see oversold, oversold, positive divergence. That was bullish. That sparked this rally, correction, rally, and now you can see we've come full circle. We were overbought back here, and we did have that correction off this cluster of overbought readings, but we've extended now. We have negative divergence. So this sets the stage, guys. This is what I'm trying to say here for a much deeper correction based on the divergence. Again, the last time that we had negative divergence on the daily time frame on the US dollar Japanese yen pair was back here, and that led to the biggest drop that we've had in years. So why can't that happen again? That's what I'm looking at. And again, that would set the stage for a drop in the dollar and a rally in gold. So there it is. Oh, I probably would be remiss not to go over GDX. Now the market's open. Here's GDX. I think what I wanted to show you is a 60-minute time frame. There it is. Okay, I'll keep it simple. The market just opened, but here's GDX. We had a divergent low right there. You can see positive divergence, at least on the PPO. Boom, nice tradable trend. And remember, GDX moves. When it moves pretty good. So what I'm showing you now, this going back a couple months, 60-minute chart, divergent lows, and now we have a very steep, a pretty well-defined downtrend line, divergent low. It's not the steepest divergence. Actually, it is. You can see we're making a slightly higher high in the PPO and the RSI. Not as steep as these previous divergences. However, the fall in price is a lot steeper. So the divergence, therefore, is about as comparable. So, we have almost flatline divergence on the indicators, but very steep fall in prices. And so this could lead to a nice pop here. So something to watch. And I'll have to study this chart a little further to give you price targets. Let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Again, not an official trade yet, but it might be if it comes out. Whether it's official or not, I like it. I wouldn't do the video if I didn't. Certainly could help to see a little bit of evidence to firm up a little bit of some bullish candles, some type of reversals, maybe some confirmation of the divergences that are in place. So maybe take a starter position now, add to that, or if you're a more conservative conventional trader, wait for a better buy signal, if you will, to engage. This has been Randy Finney again with the Right Side of the Chart. I hope you enjoyed it, guys.